You picture it clearly, your own rig rolling down the highway, engine humming steady while paychecks arrive no matter where you are. No boss riding along, no cubicle walls, just open road, a loaded trailer, and freight rates that seem to promise easy money. Buy a truck, sign with a broker, and watch steady income roll in while everyone else sits stuck behind a desk daily. That is the rugged dream trucking forums and roadside billboards sell you, the truck as an easy path to real financial independence. Here is what almost nobody tells you before you sign that loan and become the proud, exhausted owner of 18 heavy wheels. Owning a trucking company was never really about simply driving freight from one city to another for a steady weekly paycheck alone. It was about surviving on razor-thin margins, while a dozen hidden costs quietly ate away at every single mile you drove. Start with the number that shocks almost every new owner-operator, the true all-in cost of running a truck each mile. Industry data from the American Transportation Research Institute puts the average cost to operate a truck near $2.26 per mile. That figure covers fuel, equipment, insurance, maintenance, and labor, every single expense stacked together before you ever see a dollar of profit. Fuel alone often runs 45 to 60 cents per mile, making it the single largest and most volatile expense you will face. Truck payments or depreciation typically add another 18 to 30 cents per mile, whether that truck is loaded or sitting completely empty. Insurance alone can cost $8,000 to $22,000 a year, depending heavily on your driving record and cargo type. Maintenance and repairs add another meaningful chunk, since one blown engine or transmission can wipe out weeks of hard-earned profit instantly. Permits, licensing fees, and compliance tools like electronic logging devices quietly add hundreds more to your monthly overhead before a single mile. So what is the actual trap hiding underneath the glossy photos of open highways and confident drivers in the glossy recruiting brochure? The trap is that gross revenue feels like income, but fuel, insurance, financing, and maintenance quietly consume most of it before you notice. Most owner-operators discover their true cost per mile lands somewhere between $1.60 and $2 before they even pay themselves. A driver grossing $250,000 a year often nets only $60,000 to $120,000 after every expense. Deadhead miles make the math even worse, since empty miles burn fuel and wear tires while generating exactly $0 of revenue. If 25% of your miles run empty, you need nearly a third more revenue on loaded miles just to break even. So who actually gets rich from the trucking company you are dreaming about starting this year with your hard-earned personal savings? Truck manufacturers get rich first, selling a rapidly depreciating asset at a premium price before that same asset loses significant value immediately. Fuel companies get rich next, charging premium prices at truck stops, knowing drivers rarely have time to shop around for better rates. Insurance companies get rich charging steep premiums on an asset that carries significant liability risk every single time it leaves the yard. Freight brokers get rich collecting a cut of every load, often keeping 15 to 20% of what the shipper actually paid. Factoring companies get rich advancing cash against unpaid invoices, charging steep fees that quietly shrink already thin margins even further still today. Equipment lenders get rich financing your truck and trailer, collecting interest whether that truck is hauling freight or simply sitting idle unused. Tire manufacturers get rich too, charging premium prices for replacements that wear out fast under the constant weight of loaded freight daily. And large carriers get rich because their massive fuel volume and freight contracts crush what any single small owner could ever negotiate. The small independent owner-operator, meanwhile, often works exhausting hours just to keep thin margins from quietly disappearing completely some slow months. This is the quiet architecture of trucking wealth, where fuel, insurance, and broker fees flow upward before you ever see real profit. The trucking company itself was never really about the truck sitting quietly in the yard waiting for its next scheduled load pickup. It was about who controlled freight volume, fuel pricing, and financing in an industry that looks simple but runs on brutal economics. Consider Johnny Brian Hunt, a former truck driver who started a small rice hull business in Stuttgart, Arkansas back in 1961. That first year, Hunt's rice hull operation lost $19,000, and friends quietly advised him to close the struggling business entirely. Hunt refused to quit, and within a few years, the rice hull business became the largest producer of poultry litter in the world. In 1969, Hunt purchased 5 trucks and 7 trailers to haul his own product, launching what became J.B. Hunt Transport. For over a decade, trucking remained a sideline business, quietly supporting the larger rice hull operation that had built Hunt's early fortune. Hunt kept costs low by purchasing his own trucks instead of leasing from owner-operators, a strategy that soon became industry standard. He also kept driver pay disciplined, which allowed the company to offer drivers far steadier freight volume than smaller, less organized competitors. That combination of owned equipment and steady freight volume became the real foundation for everything the company built in later decades ahead. By 1983, the company ranked as the 80th largest trucking firm nationally, and Hunt sold the rice hull business entirely. That same year, J.B. Hunt Transport Services went public on the NASDAQ stock exchange, raising capital to fund aggressive nationwide fleet expansion. By 1987, J.B. Hunt had become the largest publicly traded trucking company in the entire United States just 4 years later. In 1989, Hunt pioneered intermodal service, placing truck trailers on railcars to cut fuel costs and stretch driver capacity further. Annual revenue surpassed $1 billion by the early 1990s, transforming a small rice hull side business into a national powerhouse. Hunt did not get rich driving a single truck, he got rich building a system that controlled scale, contracts, and rail partnerships. So should you actually start a trucking company this year? Or is this simply another romanticized trap dressed up as easy money? The optimist case looks like this: you run efficient lanes, minimize deadhead, and build direct relationships with shippers instead of relying on brokers. Your cost per mile falls year over year as you learn which lanes actually pay and which ones quietly drain your margin. The realist case looks messier: fuel prices spike suddenly, a broker delays payment, and your margin swings wildly from month to month. Slow freight seasons, unexpected repairs, and rising insurance renewals can all quietly shrink your margin far below what you originally projected for. You still profit, but slower than expected, and much of your early capital goes toward insurance, permits, and expensive scheduled maintenance costs. The worst case looks like this: a major breakdown hits right after a slow freight month, and your cash reserves disappear almost instantly. You sell the truck at a steep discount just to escape payments that no longer match the freight your business can actually secure. A solo owner-operator running 100,000 miles a year can expect total operating costs to reach well into six figures annually. That leaves a genuine profit margin of only 10 to 15% after every single fixed and variable cost is finally subtracted. Gross revenue of $200,000 can easily shrink to $60,000 in real take-home pay after every expense. This does not mean trucking is a worthless business. It means it rewards disciplined cost tracking far more than romantic dreams of the open road. The people who win long-term rarely stay solo forever. They add trucks, negotiate direct freight, and slowly build toward real scale. Scale changes everything in this industry because bulk fuel purchasing and dedicated freight contracts unlock pricing that small owners rarely ever see. One slow freight month barely dents a large fleet, while that same slow month can sink a single owner-operator's entire year. This is why large carriers keep expanding while individual owner-operators keep quietly selling their trucks and returning to company driving jobs. The math does not lie. Even when trucking forums make the open road look like effortless, guaranteed personal freedom, and easy income. If you do decide to buy a truck, treat the first year as a brutal education, not as guaranteed, comfortable passive income. Study your realistic cost per mile, your true deadhead percentage, and your actual fuel efficiency before signing any truck purchase agreement blindly. Talk to current owner-operators in your freight lane, not just recruiters who profit the moment your signature lands on the paperwork. Underwrite conservatively, assume higher fuel and maintenance costs than advertised, and never assume freight rates will simply bail out a mediocre decision. The trucking company was never really about the miles logged quietly on a glowing dashboard somewhere between two distant, unfamiliar highway cities. It was about the real difference between someone who tracks cost per mile and someone who merely owns an expensive, depreciating truck. Real wealth in trucking rarely looks like the rugged photos. It looks like spreadsheets, fuel cards, and patiently negotiated freight contracts instead. The silent millionaires in this space are not the ones posting highway sunset photos online. They are quiet, methodical fleet operators instead. They are the ones who tracked deadhead percentages, fuel efficiency, and broker fees long before anyone else even considered the real math. They understood something simple, that a trucking company is not passive income, it is a logistics business wearing a rugged highway costume. That rugged costume is comfortable to photograph, but underneath it sits fuel bills, insurance premiums, and relentless scheduled maintenance costs constantly arriving. This pattern, hidden wealth dressed as simple grit, repeats across almost every roadside industry people believe will make them rich very quickly. It shows up in tow trucks, delivery vans, moving companies, and rideshare fleets, wherever a rugged image hides careful financial engineering underneath. The real money almost never sits with the driver behind the wheel. It sits one layer above, with whoever controls freight volume. And that is the pattern this channel keeps returning to, again and again, the silent, unglamorous truth hiding behind every roadside dream. If trucking taught you anything today, let it be this simple lesson. Look past the highway and study the actual cost per mile. Because somewhere behind every single mile you will ever drive, someone else already quietly built the system that profits before you do. That is the real lesson of the silent millionaire. Wealth always prefers structure, scale, and patience over grit, hustle, and easy promises. Next time someone romanticizes trucking money, remember Hunt's failed rice hull year, not just a single glowing highway sunset behind a windshield. His empire came from cost discipline and scale, not simply from personally driving a single truck across the entire country decades ago. Somewhere right now, a quiet operator is negotiating fuel discounts nobody notices, while someone else photographs a sunset from a truck cab. That quiet operator will very likely still own trucks in 20 years, while the flashy owner-operator has already sold and quit. This is not a reason to avoid trucking entirely, it is simply a reason to approach it with humility, math, and patience. The trucking company can absolutely build real wealth, but only for people willing to treat it like a logistics business, not a hobby. Every number in this video came from real industry data, real transactions, and real companies that actually built lasting trucking fortunes over decades. Johnny Bryan Hunt started with 5 trucks and 7 trailers and built one of the largest transportation companies in American history today. You do not need his exact scale to benefit from his lesson. Discipline and patience beat grit in nearly every trucking business decision. The next time someone shows you a rugged trucking company online, ask about their true cost per mile before you ever ask about the truck. Ask about deadhead percentage, fuel efficiency, and realistic freight rates before you ask about the size of the engine or the paint job. The silent millionaires already asked those boring, unglamorous questions years ago, quietly, without an audience, long before they ever became wealthy from freight. That is exactly why they are wealthy, and why so many louder, more excited drivers are still chasing their very first profitable year. None of this requires toughness alone, it simply requires patience, honest math, and the discipline to track every single mile carefully driven. Most people quit trucking not because the driving disappointed them, but because the true costs never matched their expected take-home pay. Regret rarely comes from the freight itself, it comes from fixed costs that kept arriving whether loads were plentiful or truly scarce. Wealth built on trucking consistently rewards discipline over hustle, patience over sheer toughness, and honest math over glossy highway photographs posted online. The dream of the trucking company is not entirely fake, it is simply incomplete, missing every hidden cost hiding beneath the highway. Fill in those missing costs honestly, and the dream slowly becomes a real, achievable business instead of an expensive, disappointing financial lesson. Every single silent fortune in trucking was built the exact same quiet way, one honest mile, one careful decision at a time. Trucking companies, tow trucks, moving vans, and delivery fleets, the packaging always changes, but the underlying architecture of who profits first stays identical. Understand that hidden architecture just once, and you will start seeing it everywhere else that money quietly moves, far beyond trucking itself. That is the real education hiding inside every trucking story, far more valuable than any single mile you could ever truly drive. Because once you finally see who controls freight pricing first, you can decide, with clear eyes wide open, whether you want to play this game. And if you do choose to play it exactly like Johnny Bryan Hunt, with patience, structure, and total contempt for the easy dream. The silent millionaire is never the loudest voice on the highway. They are simply the last quiet operator still standing after the cycle turns. Subscribe if you want more stories exactly like this one, where we quietly take apart the loud dreams that everyone else keeps selling. Because the real money was never inside the cab everyone loves to photograph, it was always hiding in the cost per mile nobody discusses. And that pattern, hidden in plain sight the entire time, is exactly where this channel will keep looking for the very next silent fortune.